Good morning. It's Wednesday, April 10th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday we saw another strong performance in the commodity space as geopolitics, central bank buying, a pickup in manufacturing, as well as the possibility of supply chain disruptions, coupled with a resilient economy, has fueled a broad-based commodity complex rally. Today we have the highly anticipated March CPI print, where month-over-month consensus on the core CPI is plus 0.3%. The year-over-year consensus, which many of the financial institutions are watching, is expected at plus 3.4%. The CME Fed Watch Tool has a 50-50% chance of a June interest rate cut. It would be the first cut and expected at 25 basis points. Later in the session, we'll have more clarity as the FOMC minutes are released, where Fed officials projected 3 interest rate cuts and cited that they were not concerned about January and February's firmer inflation data. Now, today's data and today's number could confirm that January and February were just a bump in the road, so we hang in the balance of 2 or 3 interest rate cuts this year. Now, getting into the precious metals, the path of least resistance does remain higher. It's fueled by, number one, central bank buying. Number two, which we haven't really seen but just a slight bit of, is a weakness in the dollar. You still want to watch some key levels, and it's round numbers. The 104 level, the 104.50, and ultimately the 105 level. The 105 level could be detrimental to this rally in the precious metals markets. That's why we suggest long-term protection. Some of the things we were looking at was, where's your line in the sand on the gold market? I believe for me and myself, it's about 2170 to 65. If you look at the current chart pattern, it would suggest that a head and shoulders pattern would be underway and completing to the downside if a breach of that 2170 level was hit. Now, it is about $170 to $200 away from where we're trading at right now, but it is a line in the sand, and I believe everyone should have one. We'll also want to monitor the treasuries here, as we've seen a rocket ship of a move in 2-year treasury yields, also 10s and 30s. This was merely a repricing from the December Fed meeting, where it was widely anticipated we would see 6 interest rate cuts in 2024, and since then that number has whittled down. Now, if you followed me on the S&P 500 with the levels that we projected yesterday, we did nail the top end of the range and also the bottom end of the range. So we'll see if those two levels are tested here again today. Your critical level on the S&P is going to be 52.89. We close above that level. It could fuel a move back up to new contract highs. I believe your critical level of support, 52.11, down to 51.70, which is the 50-day moving average on the downside, where I expect that to be met with long-term buying and some of that sideline money coming back into the market. Your critical level on the gold market, near term 23.50, however that level might not hold. We break below there, I believe it's more round numbers, 23.05, 22.50, and down to 2200. So looking at the silver market, that is kind of decoupled as well from the gold market, as you're seeing the gold silver ratio take a nosedive. We were at a critical level of support of 86 to 1. The critical level where silver was too cheap against gold was 92 to 1. Since then, we've broken loose through there and attracted the attention of many more retail investors plowing into the SLV, the GLD, silver futures, and smaller silver futures. Remember, there is a 1,000-ounce contract there, and the margin requirement on there is about $2,100 to control 1,000 ounces of silver. We're seeing a small snapback in the Bitcoin market. Also, crude oil futures kind of consolidating around a 2-day sell-off here. All your grain futures having a small boost up as the dollar index is a bit lower. I gave you a proxy here if you were looking for other asset classes or other different commodity-based currencies to consider going long. Things like the Australian dollar had broken out to the upside and also giving you easy levels to know where you are wrong at on the trade as far as a breakdown of critical levels of support. Remember, I do preach that risk management is the key to success here in the commodity space because of the nature of the leverage products, and then also you want to have a risk management strategy in play, and then you want to trade your plan surrounding it here. So looking at these markets, keep your head on the swivel. We should see a surge in volatility, so no real specific trading plan in place here. Again, I did mention that we were looking at, for longer term protection, about 77 days to expiration. The 2170 put on the gold market running about $600 coming into this time frame. That covers the 100-ounce contract. And remember, you could build positions using the 10-ounce contract around it. You got any questions, give me a call. I'd love to talk to you. I'd love to work with you over here. We do have a full service trading desk. We also do have a CTA program and also a wealth management program as well that has exposure to these particular metals and other commodity asset classes. Again, you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck and good trading.